Hey everybody, Brian Shannon here from alphatrends.net. Today's Friday, July 31st, 2015, and we had a pretty volatile week here. The markets finished with gains for the most part. You can see that oil was down as well as the US dollar. So oil now down close to 21% year to date. The biotechs, which are up close to 25%, bounced back a little bit here this week, but pretty much a bullish week for equities. So let's take a look. The S&P 500 still showing that we're in this bigger range here and really not making any progress on the overall picture. But of course, when we have as strong a bounce as we did this week, there are short-term opportunities in the market on the long side. We came into the week with the markets closing on the lows last Friday and gapping lower Monday. We got back above the volume-weighted average prices over in here, and the market kind of took off here the last few days. So looking at it on a week-to-date basis, here's where we saw that the volume-weighted average price for the week, we had pulled back to that on Tuesday. It held as support, and we stayed above it for the entire week. Now we have to look at, of course, what do we have going forward. So we have the 5-day moving average now flattened out, and that is also at this little pullback low. So the important level for next week early on will be about 209 and a quarter to 209.50. As long as we hold above that, we give the benefit of the doubt to the buyers, but keeping in mind, of course, that we have the potential for some resistance just ahead with this prior support in here, which turned into resistance, and we back it up on the bigger picture. We just remain in a big choppy range. So you can look at this market as not doing much of anything, or you could look at it from a shorter term perspective of there's been a lot of opportunity for traders in here, and this is why even if you're not an active trader, it's a good skill set to have to compensate for the times when the market is not directional. The Nasdaq came into the week looking kind of ugly here as it had broken down below this prior level of resistance, and it looked like it had the possibility of becoming from a failed move lower. From a failed breakout could come a fast move lower. So we found support at that rising 20 and 50-day moving average conjunction. That'll be an important level moving forward. But going into next week, I think it's more important that we really kind of hold in basically about 110.5 to 111. If we pull back a little bit towards that level, I wouldn't view that as a bad thing. But if we broke below here and stayed below it, then perhaps we're going to see a little bit further profit taking. For now, though, we look at this market as innocent until proven guilty. It's above a rising 5-day moving average, and if we break below here, we would have to get a lot more cautious in our outlook. The Russell 2000 did bounce back as well, but looking at this, it's just not very pretty on the chart. That you can see we broke below this low from back in March on a quick dip lower on Tuesday, and then we had seen this market recover. Now, it had been recovering on lighter volume, which is a warning sign, but today kind of came back to its average volume. Looking at this daily chart, though, we do have a declining 10, 20, and 50-day moving average, and backing it up a little bit, though, we see that the 200-day moving average is where this market is holding. So from a longer-term perspective, we still look at this market as the buyers in control, as this prior level of resistance throughout most of 14 has been support a couple times here this year, and this is going to be a very important level, 119.5 to 120 over the next few weeks. If we can put some distance between that, that would be great. It was good to see, of course, that we survived a Fed meeting and a lot of big earnings reports this week. But for the Russell 2000, you get the potential for resistance just ahead. This had been resistance over here, which turned into support, which broke, and now has the potential to become resistance again. So the Russell 2000 is a little bit murkier, and the semiconductors is still pretty clearly in a downtrend. They broke to a new low this week for the year, and a quick flush below there. We saw a little bit of a bounce, but really not much conviction. It doesn't appear in this buying. As you can see that, we did hold above that 52 level, but we're not really seeing any conviction or follow through on the upside. In fact, today we got right up to this prior support, which had been resistance a week and a half ago, as it found resistance at the prior support and declining 5-day moving average. So above 53 makes it a little bit more neutral, but this is still a giant mess, these semiconductors. They've been down a lot over the last couple weeks, a couple months rather. And if they don't scare you out, they'll often wear you out. Meaning, don't expect it to just turn quickly higher. It may just continue to churn sideways. The financials also kind of survived a little bit in here, or recovered a little bit. We had seen that this has been the prior band of resistance in this area, and that band of resistance was broken briefly right at the 20 and 50-day moving average also. So this week's lows are going to be important moving forward, and you can see even on this daily chart, what we're looking at here in the daily time frame, that this support we are hanging just below, and on the 30-minute time frame, you can see that we're turning more neutral as the 5-day moving average is flattened out, and now if it can get back above probably 25.30, it looks like maybe the buyers will be back in control, and this will be an important higher low to measure risk against. So if we get back above 25.30 and hold above 25.10 or so, it appears as though the financials may be able to continue this rally that they're in, but it's just been a grinding event. No real, nice push higher. The, oil USO, if we take a look at that, is at a new low. Commodity, the crude itself it hasn't made the new low, but it's obviously still in a big downtrend. Biotechs came down to their rising 50-day moving average, and they've survived a few tests in there over the last several months. So this is becoming a more important level, and on this biotech index, you can see we're starting to turn that 5-day moving average flat again, getting back above 385.50 or so. I think if it were to hold 380, then it's likely we'll continue to move higher. This week we did, of course, see last night we saw Amgen report earnings. This stock is up at all-time highs. Amgen is AMGN. Let's type that in on the weekly chart. But last week we had seen of this shares of Biogen IDIC, and Biogen, I guess they don't call it Biogen IDIC anymore, but BIIB. This stock went from 420 down to 300 based on earnings. So it's not just the little biotech stocks that you have to be worried about. These guys can lose 25% in a heartbeat as well. Bonds did turn nicely higher. The 50-day moving average starting to flatten out, and getting up into this level is likely to become some resistance. It was this prior support which had held as resistance. On a longer term picture, we're still just bouncing within there. So the bonds are pretty murky as well, but it appears as though, again, getting past the Federal Reserve meeting gave bond buyers a little bit more confidence. Gold continues to be awful. It's still in a downtrend. It could get a bounce in here, but it will be guilty till proven innocent, as the longer term trend is clearly broken. And again, if they don't scare you out on this sharp decline, they'll typically wear you out in here or on that next move lower. So we had seen some earnings reports this week, of course, from we had seen follow through on the downside from Apple. So anyone who's buying Apple below a declining 5-day moving average is recognizing why you don't do that. We do have the potential that we find a little bit of support in here, as this was the level we had found support on that last sell-off, and we have the 200-day moving average. But it's not a buy. It's really more neutral on a longer-term picture. It's just kind of in this bigger range. I don't really see an advantage to being a buyer of Apple. So we had seen Akamai, for instance, had gapped lower on earnings on Wednesday and finished the day higher and went on to new highs the last couple days. Shares of so-called blue chip Chevron continue to get annihilated here, down another close to 5% today, as it appears as though people are just starting to puke this position. You've got the potential that it might find some support down near 85, 86, but the trend is still clearly lower in that stock, and it's something you don't want to be involved in. Just like Stratasys this week, we saw that this stock has been in a horrible downtrend. A lot of people still like the 3D technology. It's a great story, but similar to rare earth metals a couple years ago, when the selling starts hitting these momentum names, you've got to move to the sidelines and forget about the stories and look at it as guilty till proven innocent. Well, it's below all these declining moving averages. We'd seen a little run up that got people excited about it, but then this week we saw that that run up with a longer term downtrend did fail, and here we are right back down to the lows again. The bigger ones, of course, that everyone likes to talk about, Facebook, really not much of a response to earnings when they were reported. they gapped down and sold off a little bit, but then recovered most of that. They are still lower. So if you take a look at the volume weighted average price of the last 2 days is right here at about 94.50, meaning that on average people are selling into the strength in Facebook, but perhaps getting back above this level here next week, that little downtrend line and Wednesday's high, that it would make that run for 100 plus that a lot of people are looking for. It's still a constructive pattern overall, but there's no advantage to being a buyer with a declining 5-day moving average. In Facebook, again, it's just a piece of garbage. Look at, forget about the story of the stock. It's still, again, that 50-day moving average declining and people got excited about it, but it's a downtrending stock. It's not a good company, not a good stock to own. Alibaba, same thing. I can't tell you how many times people have told me all year, but it's a good company. It's a good company. We don't know what a good I don't know what a good company is. I don't care what a good company is. I'm interested in a good stock that I can make money in, and it's not stocks that are in downtrends like this or in downtrends like Whole Foods, which is, that continues to see a declining 50-day moving average. News and surprises tend to follow the direction of the trend. Hopefully, you'd seen my mention last week of shares of Vonage on Alpha Trends, talking about this cup and handle and how it looked ready to get going, and it had a real nice breakout this week.